Cool. Good morning. Hey, what's up? What's up? How's it going? Hope you had a good weekend. Let's see what we get this week. Quick look. Consolidation is still continuing, so right, as usual in a consolidation, we kind of will gap below liquidity points, right? So we consolidate, and then we end up opening below that sell side. Still maintain the actual 4 hour, and now we're just really right back inside that range. At the same daily volume balance that we continue to reference. As far as what we have here, still some new day opening gaps, first presenteds. As far as what I would expect today, let's see, 15. Short-term highs probably, right? If we can push through and get these highs. We have news at 10 o'clock, so we won't really be doing anything until then. To be honest, I'd like to see a retracement first. So if we can come back down here. We have our first presented, very small opening range gap. So that will lead us to expect consolidation this morning. But we still may have an opportunity. So I'd like longs. We'll kind of be aiming for those. As you said, high impact news at 10, so not until then. We'll just kind of follow price for the time being. Just getting some liquidity points up here. Daily volume balance, perfect delivery. Always nice. I'm kind of hitting that, getting stuck there. Right, you see that a few times already. Bodies don't really want to get above that. So I'm trying to see if that's going to hold us still as we head into the 10 o'clock hour. If that can hold us, send us lower. That'd be a nice area to look for longs there at that point. Taking a look around at the other markets, pretty much in the same spot here. Just kind of browse where we are. So NQ, did we get that low? We have SMT at the lows currently here on a 5-minute. Which is why I'd kind of like to see if we could get a retracement to actually hold this low and give us another one higher for the time being. See if NQ can get these highs as well. Yeah, in a big picture sense, I mean, don't be shaken, right? We're still just really stuck inside this. I'm not too sure if we're going to want to get outside of it today, tomorrow, who knows. We'll have to kind of work with the assumption that we're going to stay range bound, so small targets. Quick to protect capital. But yeah, we'll see if we can't hold this. So we have 10 minutes. If we can kind of protect a high, maybe even go up one more time, but hold the bodies again at the daily volume imbalance high here. Give us the retracement lower. We open below. This volume imbalance here is actually 2 sets of daily volume imbalances, okay? So let me see if I could show you a little bit better. So the one that we have up right now is this one. It's from where this candlestick closes to where this opens. But if you notice, from where this candlestick closes to the next open, it's actually overlapping that same volume imbalance high, which is why I'm keeping that there. Right, this candle closes, it opens with that volume imbalance, and it's actually the same that was created here. So we're hitting pretty much previous day's close as well as volume imbalance. New day opening gap, right? You can see everything kind of aligning here. Very large new week opening gap as well. So if I kind of go back 5 minute, zoom out, right? We have an overlapping of a lot of new week opening gaps. So once again, that's going to be pretty much a sign of that consolidation to come. If we can somehow like expand above Friday's high, maybe we'll start running really this 1 hour I'm looking at. Right, that's the same 1 hour that we really can't get above the whole last week. We're pretty much stuck between, I had the indicators, the 1 hour here and the 4 hour down here. That's been holding us. Right, we continue to reference it, but price doesn't really want to escape any lower than that. Conversely, it doesn't really want to get any higher than the inefficiency here. But I like that. We've swept that daily low. We're accelerating again. So I would favor longs today. We did get buy side, so we've already cleared the buy side. That was this high. Let's see if we have any. Just gonna throw up some other 1 minute swing points. This one's clean because notice swing point with untapped inefficiency. Right, we always like those. So you can grab liquidity as you trade into an untapped inefficiency as well. So if we slow grind, if we just continue to slow grind, we may have to actually kind of change the idea and try to catch a short back down into this if it presents it. Took 5 handles at 950, nice. In and out. Nice and quick. For me, I'll never really try to trade in front of high impact news. Especially if it's like the first day of the week. Not necessarily saying it's a bad trade or anything, but for me, I just let those opportunities pass. Right, even though you can see it, I mean, it was pretty clear cut, short-term low, clear displacement. Like as we close above that, you could use the fair value gap. But for me, I just like to wait for the news. Cool. But yeah, that works. Right, if the setup's there and you feel comfortable in it, that's fine. It makes sense. Definitely more high risk, I would say. That's one thing I'd agree with. Because you never know really what news is going to do. Dollar is dumping, so that is kind of why we're seeing the indices rise. And if it can continue to dump, then we would expect a continued bullish delivery. But yeah, for me at this point, I'd like to see news make an attempt to run out some of these short-term lows, retrace into this fair value gap here. Or at least the 5-minute, right? And then from there, I would look for another run higher. A few more minutes, and we'll get the week rolling. Little 3 drives here as well. Really from this low. First drive, get that retracement. Second, daily volume balance. Third, to clear the buy side. So now if we could start falling back down on itself as we head into 10 o'clock. Ideally, I'd like to see some type of confirmation from here, right? So I won't necessarily just be blindly entering. That's not a terrible idea. Like if you are someone that does that, that's okay. I just like confirmation. So I'd wait for like a retracement into it. And it could be a number of things. Could be like a classic YouTube model, right? It could be an inversion. Doesn't really matter. Just looking for that confirmation. So like we can create a fair value gap. If we invert that, I'm fine there. Volume balance. Could even be just like a classic. Like if we come into it fully and we just hold and then close above it, I'll probably just use it with the expectation that it should be balanced to hold price on the leg higher. So as we say, the actual entry mechanism may differ, but the idea of the confirmation is simply what I'm waiting for. Another drive. Okay, so a lot of higher lows here, which I don't mind. Trendline liquidity. So to be honest, I would almost expect 10 o'clock, if we're going to hit that buy side, to reject and run lower. We'll see. That's what I would want to see anyway, since we haven't made any attempt to run these lows, is to try to run those lows at 10. Maybe hit that buy side first and then break. So right through it, let's see if we close above that or if we can just hold it. If we close above that, leave a fair value gap, we might just keep running, to be honest. Get that classic Monday where it's just one-sided. First presented as well, so I'm looking at that. I'm kind of seeing what the body wants to do here. As I said, for me, ideally, I'd want to see it actually hold that. Try to run out lows before going higher. So body should hold that. Looks like I want to see if it's going to hold the actual buy side or just the fair value gap. Yeah, so it did end up holding that actual fair value gap. Right, first presented. At this point, if we were to accelerate through this wick, I would expect a continued delivery. And we may have to readjust. Because we run at the lows, 830, displace, that's balanced. We come into the BPR. We get above the daily volume balance. Okay. maybe a scenario where the actual daily volume imbalance is what's going to hold. Like if we go to higher time frames and just take a look at this real quick. We do have a fair value gap here, and we have another fair value gap here. But if we kind of look more to the left, we've already delivered in this area quite a bit, right, up and down, especially within the daily volume imbalance. So as we create this run lower to clear out the liquidity on the way back up, we're now rebalancing pretty much this whole price leg. So even though we do have some inefficiencies here and here, as we close above this high, I'm kind of thinking that if we're going to want to maintain bullishness, there's no need to actually come back down in here. So these will become breakaway gaps like this. This one a little bit more iffy just because it's in the daily volume imbalance. But if we were to close above the buy side here, I think these may be left open for the short term. Immediate rebalance. Okay, let's see how this 5 minute closes here, because this is a 5 minute as well. So no, they're right. That'll kind of confirm that if we're going to close above this 5 minute, we may want to use that as the inversion, which will leave these breakaway gaps, or leave these gaps as breakaway gaps here. Okay, we've closed above this, closed above the buy side. 5 minute will close 2 minutes. We got above the first presented as well now. So as we said, if we're going to close above this wick, in my mind, the first presented is going to want to hold us. And maybe we'll get up into this one here. As we often say, wicks like this traded through can be seen as gaps in price almost. Same idea. $5 minute, I do like that. So if the 5 minute can close above, I wouldn't mind the retracement, because notice the 5 minute consequent encroachment is synced in with this 1 minute here. So I would like that as an area of retracement. Kind of retest the buy side as well. If we want to maintain that order flow, though, we may just use first presented here. Keep that slow grind going, right? No retracement. Since we've kind of opened after we clear the sell side here, no true really runs on any lows. Higher low, higher low, higher low, higher low. We'll see if we put in a higher low, right? My expectation would be retracement here, 5 minute holds for another higher low, and then the run. I wonder what we could do with that. Let's see. If we're going to use the original buy side, stop loss would be below this low. No inefficiencies on the 15. 5 minute has one. Okay, so the 5 minute has closed. We may have to just do that, to be honest. If we can retap the 5, we're going to try that. Which is the most recent swing low, so we expect the protected lows to continue. Oof, but it looks like first presented may just want to do it. As we said, we close above it here. If we want to use it right away, the candles are going to find support at its midpoint. So I'm looking at that. I gotta bring up that midpoint there. Right, bodies hold it, and now we've actually closed above that wick. So to be honest, we may have to even follow that again. Use the wick. Price is going to stay bullish. Volume balance. Right, so notice as we're leaving this range, the wick, we open with the volume balance perfectly. Trade back into the close. Huge expansion. Wouldn't want to see that buy side, to be honest. Dang, we are very bullish. Okay. I don't mind trying this, actually. So we have that volume balance there. As we said, the 5-minute has closed above, but I'm almost expecting a complete bullish day here, or at least opening, where it's just going to respect the most recent discount. So if that's the case, I'm going to try to use the volume imbalance here with the wick. I'll really just go under the wick, and I'll try to get into the new day opening gap here. But it might just run. Right? Yeah, for sure. Something like that. Or just pushes and pushes until we get into, I like the first monthly. Because in reality, right, we've already cleared the daily low. So in consolidations, we're going to attack the daily high, which would be up here. These buy side equal highs. So I almost would like to see that, to be honest. Yeah. So we'll try our first entry here. A little bit higher risk. Price is moving. This is where we're going to expect pretty much just a trending delivery. We wouldn't want to see deep retracements. I'll put that in here so you guys could see as well. Keeping it light on a Monday. We fall short of that inefficiency. This is a 5-minute inefficiency, so I don't mind that because now we are... Right, we fell short of that. So if we can retrace into entry, tap entry, and then give the run up into that inefficiency here, like the midpoint potentially. As we said, I'd actually want to see these be left alone at this point. So like this 1 minute, I'd want to be a breakaway gap. These down here, I'd want to leave as breakaway gaps. As far as on a 5-minute, same idea, I'd want that to be a breakaway gap. Same here. We can use this newest 5-minute. So if we can form a 5-minute fair value gap here, that's what I'd want to hold and not make an attempt to come any lower. As we often say though, extremely bullish conditions, every new discount might hold. So now I'm really looking at the volume balance here like this, and I'm thinking, all right, if it's not even going to want to give a retracement, it may just hold fair value gap paired with volume imbalance. Wicking into fair value gap, holding bodies with the volume imbalance for another run. NQ, yep, strong as hell as well. Dollar probably still, yeah, dollar still dumping. So quick look around again. NQ in the same boat, right, just bullish. No retracements, every discount is holding on the way up. Dollar, as we said, if dollar continues to fall, ES and the indices will rise. So that's what we're seeing. Dollar has now cleared out a short-term low. Pretty much all of these relative equal lows we've cleared. If we fall through this gap, outside of the new opening gap, keep falling, that should lend pretty good for the indices here. Oh, we're getting close to entry. Let's see. So this is where I wouldn't mind this giving, like breaking here, right? If we're going to try to enter on this, we would actually want to see this for the short term be invalidated. And then we would want to reclaim that as we get tapped in. So like best case scenario would be a wick. If we get entered here, for this to be a wick entry and for the body to actually hold that fair value gap. So yeah, equal highs there. I don't mind that. As I said, I want to see the 5-minute inefficiency be messed with. If we fall through this, come back down into the 5, we'll see if the 5 can hold, and I don't mind actually putting in another one. So there's the wick, right? What I'm looking at, as I said, is this wick. If we're going to accelerate through this wick and we want to maintain bullish delivery, wicks like this should hold price. So I'm going to look at this consequent encroachment and the down close candle paired here. As you said, ideally we would have wanted this to be a wick entry. So no wick. So we'll see if we can accelerate, get back above entry, get back above the actual volume imbalance. Because in the short term, if we're going to close like this, that means that the volume imbalance that we're entering on may actually try to hold us now and send us lower. Right, so that's kind of how I follow that order flow as far as entries and whatnot, is that if I'm going to enter, I want to see that be a wick. Oh, I forgot the lines there. That's why I don't like the lines. Whatever. But you see, right, the actual high of it is where we entered. So I'd want us to reclaim that. As we said, we would need to reclaim this because now this is actually an inversion here, which is why I would favor it to have been a wick entry because then it wouldn't have actually closed, but that's fine. At this point, if we can reclaim that bullish, we should be able to run out the equal highs at least. If it holds the midpoint here, that's not going to be a good sign, especially if it holds this actual volume imbalance bearish, right? We don't want to see that. So like I don't want to see that right there because now this may actually hold that and fall and attack a low. I would need to see price pretty much disregard that, close above, turn it into a discount, run into the equal highs, where then we could probably just take one off because that's 7. So as we said on Monday, a very low hanging fruit objectives, not aiming for anything crazy. Same idea though, we don't like volume imbalances, right? Like this, that's where we're going to run into issues on the way back up, especially if this is going to try to act as an inversion. We've just perfectly delivered into the high of it. So now if we get some type of rejection, especially if the midpoint holds us and we close back underneath it, that's kind of the stuff we say when we wouldn't want to see that delivery, to be honest. We'd want to see pretty much continued bullishness. So we can get above the bearish volume imbalance, that'll be good. Get above midpoint, that allows 2 new areas of potential discounts to hold us. We need to leave and get outside, reclaiming this as a bullish fair value gap, which then should be able to offer us some type of support. And as we said, first partial is going to be an easy partial, equal highs, 7 handles. Full closure, midpoint of the 5-minute if we can get there. Don't want to see that. As mentioned, we're inside of a 5-minute as well, and this runs into the first presented, so that's fine. Right, that's why I'm not too worried about that. We understand the first presented could hold us within the wick. And now we're looking to get into the 5. We've entered on the 5-minute fair value gap as well, so that adds a little bit more confirmation. Right, we said that if this is the one that stays open, we'd actually want this to hold all these stay breakaway gaps. So far, playing out pretty nice. We'll see if we can't get one more run onto that short-term swing point there. If we can run out this high, stop loss will be, I guess it depends. If we close above this high, then I'm actually going to put my stop here at this low, and I would not want to see this first presented be traded again. If we end up wicking this high, I'll probably just have to leave the stop where it is, and then we'll take it more as a break even if it gets stopped out. Because I think we could almost retest this more than once. Ideally, we just push aggressively, but as we said, that's not what we want to see actually at all right here. So failure once, twice to get above, holding volume imbalance, staying within. If we close outside of this, that's not going to be a good sign. We would need to hold this volume imbalance. So we need to hold the volume imbalance, push through with this one that pretty much is competing right with the discount, get outside the fair value gap. If we close underneath it, I think we actually would come for this low again. You're done? Yes, sir. Hell yeah, bro. That's all you need right there. You could have took 5 and been out, right? I like that. Keep it simple. Yeah, we're going to be very, very small moves for the foreseeable future. Who knows? Always like catching large runs, but it's just so uncertain, man. We're in a very sketchy place in the world. All it takes is one bomb detonated in California. Boom. We're out 1,000 points. So gotta respect the risk at all times. Very extremely high risky environment. All right, that's cool. So as we said, we're gonna hold that, or at least we want to hold that. If we're gonna maintain bullishness, we should hold the discount that we've inverted. Same idea. If we're gonna want to see higher prices, we don't want to leave this fair value gap and close below it. We want to close above it. So we want the discounts to hold and for the premiums to give way, right? We don't want the premiums to hold and the discounts to give way, because then that leads to continued potentially bearish delivery, another attempt at lows. At this point, we're pretty much just consolidating within the current range that we're within, right? High to low equilibrium paired with fair value gaps equilibrium is going to be a very keen spot to want to consolidate, especially because we've already pumped up. We're committing to the idea that this is a false high and we want to actually get into higher time frame inefficiencies. So we should use this as kind of the launch pad to get up into that. Never a fan of this though, because right, we could fall through this quickly. So we'd want to see, we need to get above that, because this is the type of delivery that leads to, right, those quick, boom, aggressive falls. Price always tends to take the elevator down, we say, stairs up. So we'd want to see those quick moves higher. Okay, cool. So there was that. As we said, now I'm trying to see, what do we do here at this high? If we wick that high, to be honest, I don't want this wick here, so we could already change that. I don't want to see less than really the first presented here, if I'm being honest. So I don't mind even going tighter, as I said. Very quick to preserve capital in choppy markets like this. So we're actually going to go stop underneath the entry swing point, which is underneath the first presented. Hitting the 5 minute, we want to get the actual midpoint, but this is probably where price may hold if we are going to reverse. We understand that. Yeah, I don't mind that. So we're cool there. We're just going to go right, like just like that. Closure above. If this fair value gap stays open, I'm going to go break even, because now we're going to have a new discount and I wouldn't want that to be broken. And I instead would rely on fair value gap, volume imbalance, and this original as well. Right, that'd be the 3 PD arrays, with this swing low being my protected low I'd want to see held. If we come back and get stopped, oh well, we've already closed majority of it at 7 handles, right? And that's all we need. Yeah, you could look for shorts on the way back down. So we do have that, so I'm going break even here. Right, as I say, quick to preserve. Break even trade, risk free, love it. Now we just chill out. Because for me, fair value gap here, volume imbalance here, fair value gap here, volume imbalance here. If we give up all of those, we'll probably come for this low anyways, so at that point I don't want to be in. And here we'll just look for the push into midpoint. It's actually a first, what is that? Oh, that's for MES, okay. Beautiful. So now that we've closed above that, right, we'd want to see pretty much a continued expansion. What I would expect is, to be honest, this down close candle that's linked up with the fair or the 5 minutes low to hold. So if we're going to trade into the 5 minute, we'd want to see the low of that inefficiency offer us support. Pair that with the down close candle we've just created and close above. We close above this candlestick's high as well, which I like. Even though it is a 1 minute, if 1 minute structure can reign supreme and we want to maintain bullishness, that's why I would look for the low of this 5 minute to offer some type of support. Still understanding we do have this inefficiency here, so if we want to test an inefficiency, we're still allowing for all of these to hold. Right, stops at break even. At this point, not going to mess with it, no need. We either go break even after securing profits, or we can get our final TP and call it. I would expect that the low of this 5 minute should hold us because it's paired with that. Ba-da-da, 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 ba-da-da. Midpoint's always nice to have. Might want to have those wicks as midpoints, just like gaps. So have those key areas in your price chart. Which is why if expectation is we can get there, should get the 5 minute. So we tried to hold that. From here, I would have wanted to see an immediate run higher if we're going to respect that. But since we didn't, we'll probably want to retest the actual inefficiency. That's fine. As we said, if we fall through the inefficiency, through the volume imbalance, through the original bullish here, I'm fine being taken out at break even. What you can do, honestly, like right, low hanging fruit, you could even just go like this, and then you take the consequent encroachment level. So you take the anatomy. This swing high is just short of that first quarter level. So like if you don't want to reach this high, this would be perfectly valid to try to target that. Right now, especially there's a swing high there. So you could target the swing high and look for the retracement off of the discount to hold. Like you'd want to see pretty much this fair value gap hold price. Make one more attempt to run out the short-term highs here. And then that's when you can almost look for like the reversal. Right, because now usually what you would want to see is a discount be held. This discount runs into a high, and then you look for that original discount that held price to get inverted. Those become very strong short patterns, right? Inversion entries, because they're also paired with like a YouTube model. So honestly, I kind of would like to see that if we're going to try to go short now off the high of it. Right, we wanted to see the 5 minute. In consolidations, extremes of the ranges are the best opportunities to look for entries. So if we can run out our exit here, break lower, then we'll try that. If we blasted through this 5, just keep pushing bullish, that's fine too. Right, not too worried about that. We can always look for another opportunity, or just be content. Content with enough. Right, you're never sad about missing moves. So yeah, our expectation is this would hold us. This would accelerate us into the high. I am just going to close here at the actual quarter level, just in case we don't want to get midpoint, and instead we just want to wick this high and break again. Right, this will get us a good 10 handle move. This is a breaker, a bearish breaker, so that's kind of what I'm looking at. High, low, higher, high, broken. In theory, right, bearish breaker here, so I'd want us to get above that because we may hold here and break lower again. So I'm kind of looking at that. And I'd want to see, once again, the discount here to hold. So we want discounts to hold and we want premiums to give way. We open with a bullish volume balance. So what I'd want to see is for this candlestick to hit the high of this fair value gap, move away and actually keep that volume balance open. If we end up closing that in, trading back inside of this and closing below consequent encroachment again, to me that's going to be a bad sign because we're starting to hold that breaker here. And right, the original liquidity, we often say original liquidity points, very important. So as we run out the highs for the first time, we get underneath that, that's where we may hold. Notice where the volume balance is being created. It's pretty much right on that level, right, perfectly. We close on it. If we can open above, that's why I'd want to see this stay open. Instead, we close it in. We were able to hold the actual fair value gap, so that's okay. Not ideal, but as long as we can hold the fair value gap, we need to get above this original liquidity point though, right, this buy side. If not, we're probably going to want to hold that and make another pass at some lows here. Maybe come back down deeper. As we said, these are like our lines of defense, so we have those 3 PD arrays. In my mind, we have fair value gap, we have a volume imbalance. This is a true liquidity void. This one's different. That's why I like this one. right? When this candlestick opens, it makes no attempt to hit this candlestick's closure. Whereas with a normal volume imbalance like this, you'll see that wick lower. Right here, same idea. You'll usually see a wick lower. No wick, true liquidity void. That's going to be a key area in price. So if anything, we would need to wick this. That's what I'm thinking. If we were to get below that, we'll just get break evened. No, I don't have wickless candles on. All wick all the time. We do have wickless though, you're saying? Yeah, on the 1 hour. It's actually a hidden volume imbalance though. So if we can maintain bullishness, we'd want to see that be left open for the time being. Because it's the same idea, it's in a balanced price range already. If we start breaking down, then I would look for lower prices, but as long as we can maintain bullishness, all of these discounts down here will act as breakaways. Right, because we've already pretty much balanced all, I mean, anything inside of here has been traded efficiently, right, in theory. So at any point in time, price could run away, leave all of these open without any need to return. But as you said, if our expectation is simply just that consolidation, we wouldn't be surprised by a little retracement. So we gave up the volume imbalance. To me, that immediately is not a good sign, right? Especially because we displaced below the fair value gap and the volume imbalance in one move. To me, that's probably going to mean that this actual volume imbalance is going to act as a premium, right? An area of resistance, push us through outside of this and maybe attack a low. At that point, if we come back down, as we said, into this, we get stopped at break even. We're fine with that. We could always look for another opportunity. That would be last line for me. I want the low of that to hold. We'd have to see this be a volume imbalance. So the volume imbalance holds, it wicks into the low, and we'd have to see displacement away to get back above. Now all of these discounts turn to premiums, right? Because we turn this discount into a premium. We've turned the discount here into a premium. So we need to see those be pretty much invalidated. For me, already stop can immediately go here, because if we get below that, right, we're going to get stopped anyways. No, that happens every time. Okay. Protect position, what does that mean? I ain't never seen that. We gotta go like this. Boom. Because right, if we come for that stop, we're out anyways, so. Now we just let it rock. I'd want this to be the protected low because it's the low that clears this short-term swing low and holds the discount. So if we're going to hold the discount, close back above the 1 minute fair value gap, as we often say, this should be a true balanced fair value gap now, and the midpoint should not be messed with. So if we do come back down, especially if we're going to come back down through this low, we're just going to keep delivering bearish, because now we have the bearish premiums, right? As we said, this is a premium and it's paired with a bearish fair value gap. So that's going to want to hold price on the way down if we're going to want to maintain this bearish delivery. I like the idea of trying to run out these highs though, because if we hide everything, trendline liquidity here, I'd want to see that be aggressively pretty much broken and attack a high again. Kind of like this, right? A huge displacement candle that runs out the highs. We're contending with this though, which is our only issue. We're at the inversion currently. If that becomes a swing high, I wouldn't like that too much. I'd want to see us push through that high. Protect stops. Protect move stop to BE. Oh, maybe. Okay. Should we try it? Let's try it. Just so we learn. That's why I want like this. Protect. What? Fuck it. That would definitely need to be last line of defense now. Ooh, wicked into it. Okay. So that's fine. Break even. Or I guess technically in profit there even. But I'm fine getting out there. If we come back into this, say we hold, we get low tick, that's funny. But we'll probably clear that low, actually retrace into the original wick. And then from here we may start falling. So let's see what we get. Let's clear up some of this stuff, just so we're not getting too confused. We may actually bounce from here. I was gonna say this is where we would bounce from, to be honest. Let's see what we get. If we can get a bounce, wouldn't mind a potential re-entry. I want to get, yeah, I still favor another run right there. New day opening gap, 5 minute. We did hit the first presented, right, as we mentioned, which is why price broke from there. I did end up partialing another one. So as far as the actual entry, same entry. Same entry, partial there. I actually took one more off as we traded into that running down equity, so that's even better. And then same idea, stop to break even. So far, dubbed out. Right, and for me, at this point, we'll probably just let it rock now. Because we've already got the pretty good entry. We've secured plenty of profits. I mean, we've already got 8 handles. And we got stopped in profit, right? So now we're already profitable on the day. If there's another opportunity, we could easily look for that, is for sure. But we're content. Swing low to swing high. We did get stopped here. At this point, let's say that we ran into this high. Some people may be upset. Or that's kind of where you feel left out, right? Which is a valid feeling, but you have to understand you made money. So there's no need to feel that, right? FOMO or anything like that. Even if price ran right into what we were expecting, that's fine with me. Right, you get paid and you're content with getting paid. And now, to be honest, I almost would favor trying to go short now. So from here, what I would wait for is we're not going to try to chase this higher. I'm going to look for another run higher, though. So I would want to see a run higher. I'd want to see this get ran out. And then from there, I'd like to see some type of either YouTube model or, right, maybe just inversion. We just trade through and then in one pass, trade below, inversion. A few different opportunities, as we said. The entry mechanic is fluid. We're pretty fluid with that. It's more so just a narrative. So we want to see buy side cleared, some type of premium formed, and a retracement into the range to try to take short. Five-minute volume bounce again. As we often say in consolidating markets, after clearing some form of buy side or delivering into a higher time frame inefficiency, price can retrace into the original entry zone and still use that more than once. That's a sign of higher resistance liquidity runs, but we already expect that, right? So that's almost why I'm not too shaken out by that. Because we hit the volume balance, I'm pretty sure, perfectly right there, yeah. Right, it's linked with the actual, yeah, I mean, that's beautiful, right? Hard to argue that. We clear the short-term lows, perfect delivery into the volume balance. However, still just getting stuck at the bearish premium, right? So as we spoke about, if price wants to run now, we need to see these premiums be invalidated. They turn into discounts that should hold price. And as I look at this, I'm thinking, all right, well, that's also linked with this original. That's where the bodies are holding, right? You can see that bodies are holding at the original 1 minute turned inversion. The wicks are going into the actual bearish that was created within that. That's something you see quite a bit. So in my mind, let's say that we can get above the actual 1 minute here and we displaced above the actual consequent encroachment, reclaiming that. You could almost try to use that as an area of support because you often find premiums that send price lower, especially if it's going to clear some liquidity. If we invert those are pretty good areas to use. Dun-dun-dun-dun. So yeah, that's our line in the sand there. 1030, so the opening range has been put into place already, which is this high. But I would still like to see that for sure. One more run on that. Bearish volume imbalance here. So conversely, right, let's say that we trade into that. We've held that. We close below. We may actually want to use now the low of this. We didn't get into its consequent encroachment. I'd feel a little more comfortable trusting this is about to run lower if we hit consequent encroachment. Especially because we have equal highs, so we may get another just stab up into that and hold consequent encroachment. Let's say we did that. Then I would actually expect price to start running lower from here. As we said, bearish breaker held, so let's just kind of follow price here. We catch the long into the 5 minute, it creates a short-term high. it gives a retracement, and then it runs that high into a time-based PD array. As we break that, right, that's the breaker, bearish breaker. Bearish breaker holds us, sends us through a discount while leaving a premium. So now the newest premium is what it should hold, right? We see that there. That's what we're kind of keying up on. And now we've actually broken away again. So to me, let's see, we get underneath first presented, we'll start running lower. But for the time being, we're just stuck in this. So I'm not trying to really do much within the middle of this range. From this range low to high, right? That's our current range that we're within. So we either need to break through this low and close underneath this first presented, and I'll start looking for shorts, or we run out the high, break lower, and then we look for shorts there. But within this, right, we can follow and we understand what price is using, but especially because we're already up on the day, I'm fine just letting it meander a little bit. Don't need to be involved in every swing, right? You don't want to overtrade. You don't want to get yourself caught up in that type of mentality that just because it's moving, you have to try to be involved. Let's clear these indicators up. Oh. As you said, wicks are gaps. So the wick I'm looking at here, that's what this is all being keyed up on. And that's because it's paired with the volume imbalance and it's nestled within the first presented. So like something like this, I'm not really convinced that it's just going to start falling out of bed. Simply could be a run into these lows for it to hold and for the consolidation to continue. Ba-da-da. Oh, I didn't even have to check my fault whole time. Alright, none of y'all typed anyways. Good, good. Had my OBS off. Just talking to myself. Hey, yo, it's Chris. What up, Chris? Welcome, brother. Glad to have you. Okay, so still holding that with bodies. It's kind of what you would expect, right? Volume imbalances will tend to hold bodies. Equal highs here are pretty clean, so I wouldn't mind trying to see that. And then a breakaway potentially, right? As we said, if that's going to be consequent encroachment of the actual 1 minute bearish. Closure below this though, to me, that would send in, yeah, lower prices for sure. 2 minute inversion intro and NQ. Let's see what you're looking at. I mean, I can't lie, that's bold. That's bold right there. Trust your analysis, but that, like as I look at that, yeah, that's a little sketchy. It could work though for sure. Right, especially because we have a first presented for the week, so it will just be high resistance. As I said, for me, once we kind of hit points, I like to see externals ran again. So I'd want to see that high first before looking to short, but to each their own, right? This could still work for sure. It's just going to be ugly. It's actually even uglier than, because ES is at least clearing these lows where NQ is getting real stuck in that. So that's pretty interesting. This might turn into an order block. These consecutive down close candles like this into this original wick. If we end up pushing right through that, that's going to be an OB here. These down close candles, and it'll be paired with the fair value gap, so that should hold us into a run again. So I'm kind of watching for that now, right? If this is going to be an OB, the next few candles will aggressively trade through this high. Especially because we've cleared that low already. Don't like the chop as I was expecting fast. That's one way to kind of protect yourself. Like this would for sure be a scenario where I'm cutting half of the risk. Like say I entered that because I would have that same expectation. As soon as this candlestick closed back above this first presented and I came in to break even, I would immediately close at least half my position. Right, because I said very quick to protect capital. And that would be going against what you would want to see if price was going to actually maintain bearishness and run lower. I still expect to run higher, to be honest. One more. Consolidation, run out the highs. Turtle soup? I might turtle soup that. We could just use the 5 minute. Oh, and it's the first. What's that fair value gap from? First weekly? Can't be the first monthly, right? I forget what color that is. So I was like, what color is that even? Oh, it is. I just have different colors. Okay. So it's just the first weekly. I need to fix that. They need to be the same color. Blue 25. Blue 25. There we go. Okay, that makes more sense now. So yeah, it's just the first weekly, but still, that's going to be a pretty strong area. So I think I'm going to try to soup that. If we go up there, I would like that actually. It's within the 5 minute. And then you wouldn't expect the 5 minutes fair value gap to be breached. And then you could easily target then the 15 minute open fair value gap. Okay, okay. We're souping. Especially if we can hold this low. Because right at this point, every low has pretty much been held. We have this one, but that's not the true leg. Like if we're actually looking from the true leg delivery, we go up. We can even use like a 1 minute to be honest. So from the low, right, we create that protected low, protected low, protected low, protected low, and this is the actual price leg. So this is a short-term low, and that does get ran, but right, this is the intermediate swing point. So if that holds, this will still really be a protected low, and we'll see another run, and I'll look to turtle soup that, and then that should be followed by the actual break is what I'd want to see, and then you may be able to actually stack a position if we're on sides. So yeah, I like that, to be honest. That's the framework, especially if that low got held, because now we're going to have relative equal lows there for sure. Da 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 da. Equal lows, equal lows, equal lows. Yep, turtle soup. NQ pushing higher. So one thing that may throw us off here is if NQ actually runs that high and we can't run it in ES and we fall through this wick, then I don't know if I would expect the soup anymore. Right, look at NQ. So if NQ ran out this high and delivers into its new week opening gap, breaks aggressively, while ES fails to even get up here, then this may actually be the SMT and this may become a breaker. So that's what I'm going to be looking at. High, low, higher, high, broken. This will be the breaker. But I want to see us make another run, another pass at the high. NQ just got it. So I'd want ES to try to catch up quickly and just run that high out. But it's going to have to break through this and this and this. So I might not do that. Yeah, let's be smart here. Let's see. Let's see what we get. Hey, see what we get. See what we get. Da-da-da-da. Once again, holding at the original inversion. So that is the line in the sand that we speak of. So if we break from here, especially as NQ runs that high, that's turtle soup and NQ, SMT as well. Hey. Nah, if we fall through this, that's like the line in the sand, right? Price will move between these ranges. So if we fall through the wick, it's going to come back down and clear out some of these lows. It'll probably go back into the daily volume balance, and then it may bounce from there. Yeah, that's smart, Natalia. Right, wait for the high. That's what we're doing as well. We're waiting for the high entry up here. Easy to follow what's taking place, but as we say, you don't need to be involved in every swing. So for us, we just follow this. If it can get up here, cool. If not, as we said, if it falls through, let's take a quick look, right? We'll compare side by side with, that's ES&NQ. And then we're gonna have these ups as well, so you can just see what we're talking about. So we're hitting that new week opening gap here in NQ. So if this is what holds as our high and we fall through these lows in ES, that'll send us below this wick. That'll be clean, pretty much clean SMT, and we would expect that delivered, or the lower delivery, holding now this breaker, right? That's gonna be a clean breaker. Consecutive down close candles. Stopped in Q too early. Yup. It's alright though. Live and learn, brother. Right, the one thing that I would have said to you if I would have known is that I would never have trusted that, just because that new week opening gap there is it's too close, right? That's not coincidence. If we had traded into that new week opening gap and then inverted, that would be okay. But falling short of that, that's going to be almost like the bait, is what I've come to learn, right? That's what I call it. Is that when we have these time-based PD arrays and we're putting candlestick structure just below those, 9 times out of 10, those are going to be targeted. So you would have to wait for the run higher. Just unfortunate though, right? You learn that with experience. So now at this point, let's see what we get here. Because NQ is starting to fall. Right, as we said, if NQ falls below these lows and breaks structure, and ES falls below and breaks structure as well, it's going to almost set into motion this as our bearish breaker. Right, and what we'd be looking at is this here. So you have the equal highs, consecutive down close candles to where we've entered. To where we've entered, higher high. And now, right, if we break that low, this will be a breaker, especially if we break it with some type of displacement. So right now we have perfectly equal lows. Let's see what happens. And then you would almost see this as a new premium to send price lower. So we're watching for that too, pretty much, right? Not a bad target. NQ, no lows broken quite yet, so still a chance this holds us. Simply hitting midpoint of the wick, that'll act as a gap, right? Midpoints are key, so it's gonna probably leave a bearish fair value gap here. We could actually use that as a barometer for what price we'll want to do. Say we close above that, we'll be inverting it, and then at that point I think we can get the run higher. But yeah, displacement to me, especially underneath, we're trying to hold first presented. So yeah, this is going to be a key area, okay? First presented, we've hit the low of it perfectly while picking up a short-term low. If we want to make another run higher, this low should be protected, to be honest, and we should invert this bearish fair value gap. If we trade into this fair value gap, hold, break lower, closing below, at that point, I'm going to be pretty bearish into like here, right? The new day opening gap, the daily volume imbalance. So key area here, let's see what happens. We need to close above not only the first presented, but we need to invert the bearish fair value gap, which will get us back above the wick, and it will get us back above the actual volume imbalance, right? That's going to be key. It's going to hold us as a premium. You see that now, perfect delivery into it. So yeah, if this holds, I'd expect to run lower. We need to invert that to get this run into buy side if we want it. Which, to be honest, if we were to invert that, I wouldn't mind. Almost trying to use that. It'd be like the same exact entry. Right, just repeat it, rinse and repeat it. Okay, so we not only hold the volume imbalance, but we hold the actual consequent encroachment. So to me, that's going to be bearish. And if we fall through and close below, as we said, we'll look for that continued bearishness. So keying up here in this area. Pretty key area we got. We understand we're looking at that. I really just like the volume imbalance. The fair value gap doesn't matter too much. Consequent encroachment. Did NQ, yeah. NQ trying to get those lows, still hasn't. It's at a very small new day opening gap. Here. So still waiting for that true break through the lows, which would send ES lower as well. And then, yeah, we may not get the turtle soup. Soups are the best trades, honestly, in these type of conditions. Just because of the ugliness of price delivery. So that's going to hold. Early breaker almost. Oh, wait, did we close below that? We didn't. We're about to, though. If we do close below this, I would almost expect that to act as a breaker immediately, especially because this fair value gap has already been repriced and rebalanced. So let's say that this candlestick were to close below this and close below consequent encroachment. I would almost expect, if anything, a slight retracement into that, and then for that to hold to get us below the actual wick. We do. Okay, so watch that. Yeah. I'd almost expect that to hold us now. If anything, we'll just run. But if we're going to tap this breaker, watch the breaker entry. We've closed below low. So we have the fair value gap. That holds us there. At this point, higher time frame. We do have the 5. That'll be the first time coming into the 5. So this is where we're getting a little tricky. Because we do want to run higher. I don't really care about the... What's this? That's a 1 minute. Get the 1 minute. Skedaddle. Use a 5 minute inversion. Higher time frame. Where they overlap, that's going to be this most sensitive area. So I would almost expect midpoint to act as resistance. That's what I'm watching now. As we said, the breaker's here. So it could wick into that. Really the entire breaker. The original fair value gap. Once again, line in the sand for me here. I think if we maintain this, we should continue to push lower. If we trade above that, invert it, that will set into motion another run higher, but my expectation would be another breakdown now that we've tapped this. More than likely get back underneath consequent encroachment here. If we close underneath that again after trading into the bearish fair value gap, at that point we should actually attack this low, right, get into the 5 minute for sure. Yeah, let's see. Right, up close candle paired with the inefficiency after clearing the low of the breaker. So we're stacking a lot of premiums here, which is why my expectation would be this is all price needs to do if that's right, if it's going to break lower. At this point, the 4 hour will be, I don't know about that. It depends on if we can break, because NQ hasn't broken lows, so if it can hold its lows, it'll be fine. Well, same idea here. This wick needs to hold. That's the last line of defense. So as we said, we do hold that. We get back underneath midpoint again. We may want to hold that. Let's see. If this candlestick can close underneath consequent encroachment, my expectation would be this low. If anything, it's just going to immediately kind of reject this level and attack the low right now with this candle. Right, as we said, we've traded into the breaker, we've traded into the up close candle, we've traded into the hidden volume balance. Those are key. Right, where this candlestick closes and where this candlestick opens. Hard to tell if you're not familiar with it, but that's the hidden volume balance. And yeah, it did do exactly that. So it rejected and attacked that low right away. So for me, it's probably just going to keep running lower. That's what my expectation would be. 5 minute. It's closed below as well. Yeah, so my expectation now is we just keep running lower. First test of the 5 minute inversion at this sense. Some potentially a bounce, but I'm not convinced. I would think daily volume balance is going to want to be traded into at this point. Bro, I can't. I'm so sorry. I stayed up late last night. I didn't realize I was doing it loud. I'll yawn quietly. It's because I didn't make coffee, bro. I'm about to go do that right now. See, now you got me thinking about it. Yeah, so that was the expectation right there. Right, that would have been the short, the breaker. As we said, I'm fine not taking it, but that's pretty clear-cut entry. And it's pretty easy to follow, right? Like we said, if we're going to trade through the low, it's going to use the breaker because we've already spent so much time in here. So none of it's not going to retrace into all of this nonsense up here because this is balanced. Right, this original low to high, let's look at this range. We could talk about it. This low to high here is the current dealing range that we were within. As we take a look, all of the discounts that were created on this way up, price had repriced into them on the way down. All of the premiums created on the way down, price repriced into those and then broke away. So everything in here from this low to this high is balanced, which is why I'm saying, right, the minute we close below it here, it really has no intention to go into any of this. It would just revisit the most recent premium, which was that bearish fair value gap, and that's what holds perfectly. And then we get to break into the 5. So that would have been like a good 5-handle move. At this point, we may go back up into it now that we've kind of hit a counter, right? To counter the opposing PD or any, the 5-minute. But for the short term, it's always just nice to read those. And that's really all you would need. How much was that? Into the end, the midpoint, 5 handles, right? You could find those all day. But same idea. If we're going to close below the wick now, all of this price delivery within this wick has been balanced. So same idea. Like we won't really need to retrace into any of this if price wants to just continue to fall. So I'm just looking at where these overlapping, where the 5-minute and where the wick overlap is going to be the most sensitive. Look where the bodies, right? So now same idea. If we trade up into that, and then we close below consequent encroachment of the 5, we should use that as resistance to now push lower as well. That would have been our exit. So for me, I'm probably just going to move this entry now because there's no point. And we'll just wait and hang out the rest of the morning and see what takes place. Mike, why you hate coffee though? We got beef. Tell me. Maybe I don't know. Maybe I'm just lacking understanding because I'm new to the coffee gang, all right? I'm like a 2-year rookie on this coffee. Not even 1 year. I need to hear the supporting argument. I need to hear the defense. My expectation, as we said, if we get below breaker, daily volume imbalance would be my first thought. And then these lows. Really this low right here. Because that is the low that is the midpoint of the daily volume imbalance. Like we take the midpoint, right? We look for the closest swing point. It's this one. So if we're going to want to attack that, that's where that would be. Once again, as we said, if we close below midpoint, we're going to use consequent encroachment as resistance. We get into the low of it. We've actually inverted now the 1 minute here. So what I'm looking at on a 1 minute sense, same idea. In this delivery, no inefficiencies. So if we're just going to grind lower, it's just going to always respect this. Like this up close candle won't be broken. Then we'll go lower again. Right, and then if we fall out the 5 minute, the 5 minute shouldn't be broken and we'll go lower again. Say you're trying to force a short here. Okay, where would my stop be if I'm going to do that? It would be above consequent encroachment of the original wick that we used. Because it may want to test the low of it again, even come for these highs potentially. But if we truly are bearish, right, it should hold from here. And then you could target like the low. Keep it simple like that. Like we'll follow that and just see. 5 minute, as we said, first time inside the 5. So if it wants to hold us after trading into the inefficiency, first test of the untapped inversion, it could hold. Right, we would expect lower prices. As we said, could run these highs, not surprised by that. All the way back up to midpoint, then we would have to reassess. But in my mind, we can run these highs out and kind of hold from this wick here. right? But we got a lot on the chart, so let's clear up this. Let's clear up that so we could see. Let's clear up the 1 minute because it's nestled within the 5 minute. And we want to keep the higher time frame. So the original wick, the 5 minute, and then I like the volume imbalance here still. Key. Da, 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 da. Okay, so low the 5 minute does hold us. Simply retesting first presented. We could easily hold from there, so not thrown out yet. Getting above first presented though, then we could probably look for the high potentially. But first presented could hold us easily, right? Especially because it's midpoint of the wick. So at this point, we're not convinced we want to go bullish. Let's say, however, we left a fair value gap here. That would be a potential setup. Especially if it was exactly like this. Like if this candlestick is the actual low of the fair value gap, because now we're anchoring this 1 minute fair value gap to the 5 minute consequent encroachment and the 5 minute high. So if I see something like that, right, as we often say, too precise to be random. And I almost would expect something like that to want to hold price. What's a 5 minute? Especially if the 5 minute were to close. That's valid, to be honest. That's a setup. If we get a 5 minute, I'm not gonna wait for this 5 minute. Oh, see, Mike, that's a you issue then, dog. Come on. He said it makes me sick. That's valid though. Too much makes you feel anxious. Yeah, I mean, it is a stimulant, right? So increased heart rate. People that are anxious, I could see that. I like that, to be honest, right there. 11 o'clock, little macro hour. Well, 5 minute is about to close. I kind of do like that. I don't lie. Can't lie. Great morning. So we'll give back half. I don't mind that. We're just gonna go one. We'll just go a little full pull action if we can. Just like that. Your hands will tremble when you... I mean, that is true. I have times where, like, if I drink coffee without eating or anything like that... Hold up, I want this 5 minute to close first. We should close above. If we do, I'm fine taking this here. But no, that does make sense. If I drink coffee, like, on an empty stomach, then I get a little trembly. A little stomach rumbling. Yeah, that's the best case. You want to be anxious when you're trading. What pair? This is ES. Welcome, Brad. Must be new. Welcome. ES here. ES Futures. So at this point, we're going to try to enter here. We would actually want the volume imbalance to hold us in the short term, send us back down into entry, where then we would look for volume imbalance to be broken to use as an area of support because it is the original fair value gap that held us here, right? So I'm looking at that. I'm looking at this area and I'm saying I want this to actually be a speed bump for the time being, hold price, send it lower into entry, then displace through it, use it as support. If we're off sides, price will just fall from here and break right through our stop, fall below the 5 minute, and then we'll call it a day. But I like that. If we're extremely bullish, first presented here will hold us. This will become a breakaway. And I'm more keen to think that if we reclaim the actual wick here. So we're still within that, right? But if we close above this wick, I don't know if we'd actually want to get into that entry. And we may just run, leaving this as a breakaway. Because for the same idea, right? We've already traded down through it. We trade above, we break through it and displace away. It's balanced. We wouldn't need to get back down into there. But in this scenario, I just like to have deeper retracements for consolidations. Like if expectation is choppy markets, you say I like to enter at the extremes of the range. So I'm looking at the current high to low here, right? Highest high, lowest low. We're right at equilibrium. So while it is valid to do this and say you just want to target the high, that's perfectly fine. For me, I just like to be a little bit more precise, right? So I'll try to use the extreme of that range. Like if we broke down the anatomy of it, when I'm saying the extremes of the range, I'm simply meaning, oh, wait, where'd it go? What? I lost it? Hold up. Okay. So I simply mean trades that are below the quarter level or above the quarter level if we're looking to trade, right? I'm not trying to enter trades that are pretty much in this region of price delivery. It may work and that's fine. Those are just ones that we follow, right? And if it holds from here and runs higher, we'll just miss that and I'm fine missing it. But for me, if the market is showing choppiness, I like to use either that lower quadrant or the upper quadrant if I'm shorting. Right, and I like that that fair value gap is aligned with it, so I'm fine waiting for that retracement if we can get it. And as we said, if not, and we just push higher, that's okay. We'll just miss that move. Oh, brother. Delete that. There it is. Oh, goddamn, I just did it again. See, now you got me self-conscious. Workout in before. Yeah, that's good. I used to do that for sure. Wake up early with the lady, get a workout in before. Now I do it afterwards though. So like I'll go after. I like going after now because I don't have anxious. I'm not anxious when I trade anymore, right? So I like going after because then it allows you to like just decompress a little bit. Forget about whatever happened. I'm looking at this little fair value gap, okay? So as we push up and through, as we often say, premiums like this that hold us and deliver us into higher time frame objectives. If we're going to invert these levels, those are going to be pretty key levels. So I would actually watch and see, especially because we have a 1 minute here now. Is this bearish fair value gap turned inversion paired with the original volume imbalance and wick? As I said, I probably think that should hold. So like low hanging fruit entry would be something like this. If you want to be fully safe, stop would go below the most recent swing point. But seeing something like this, I'm almost tempted to say it probably won't even want to get below the first presented. So you could use midpoint of that wick and you would enter on that, trying to target just a 5 minute like that. Like that would have been the entry. Yeah. The original volume imbalance, original wick. And then from here, it'll probably accelerate, especially if it holds the 1 minute fair value gap. And this low, like if this becomes a swing low point in here, we would expect quick movement higher. So now we watch and see, right? As we said, if we are correct, this should be a swing low. So price will not make another attempt at this low. Instead, it will make an attempt for the highs. And it will try to close above the high. Trade into this inversion that's held us, same idea. It's held us multiple times. We get above that, that becomes a new area of support. And this becomes a little tiny, minuscule little sell to buy model here. Fractalized. Fractal nature. Yeah. Das ja. Real nice. For me, I still do like my entry here. Yeah, I do. 11:10. Because I'm also thinking, let's see, let's say we traded up here. OTE. Retesting the volume imbalance. Da, 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 da. Once again, equilibrium, high to low, consolidation expected. So I'm always kind of looking at that, right? Look where the equilibrium is. We're seeing that multiple referencing into that, but if we're going to run bullish, should really hold that and accelerate. So I'm kind of looking at that, right? The volume imbalance, as we said, especially now that we've cleared the short-term low here, we should attack the equal highs. And then if we get above that, into the inefficiency, we get above that, then this high will be in the crosshairs again. We leave that there like this, that fair value gap, I would expect this candle to hold price and accelerate it into these relative equal highs. Pretty much where our exit would have been, right? But yeah, especially if that maintains perfectly, because that's going to be the OB. This sends us to clear the low, displace above, no wick to the high side or low side. So yeah, fair value gap left open. I expect that to almost hold us. Had this taken place down here, I would go in. But as I said, for me, I just don't like being inside the middle of the range. So this is a move that, once again, we'll just follow. But because we are in the middle, it's a little bit less probable. Had this exact same setup formed right here where we tried to enter it, I would probably just be entering right here. But right, if you're someone that wants to test that, that's valid. This swing low here should be the protected low because we've picked up this low and displaced above the down close candle. And I'd want to see at least midpoint of this, potentially the original 5 minute again. We come back down through this, probably just consolidate into lunch. Right, and we just get sloppy. We'll return once again back into equilibrium, and we'll just keep referencing that point over and over, heading into the lunch hour. So it pretty much would need to run here, in my opinion. Maybe retest equilibrium one more time, but ideally hold that fair value gap paired with the down close candle. Make a pass at the highs, get above the fair value gap, make an attempt for the 5 minute fair value gap low. So that becomes a swing low. Best case scenario, this swing low stays in place. So this candle can try to test it again, but we'd want to see if it's going to leave that low. If it does leave this low, so if this candlestick stays there, closes above, you would want to see the very next candle make a pass at the highs. Either that or this candle right here. We get through it. If we take this low, I think we'll probably just stay choppy in there. But if we can hold that low like it's trying to do, that becomes a swing point. Next candle accelerates through some highs. Continue bullish. Yeah, it'd probably be a lunch move if it was going to do that. Like if it wants to go up there, just grind higher during lunch, run out the high, and then break. It's pretty much the same idea, right? We're just consolidating here. In between some time-based PD arrays. Right at equilibrium as well from high to low. So yeah, okay. It's a little late, so I'm gonna remove this here. We'll leave it here, paper, but actual entry is removed, so just because it's outside of my time parameters. Don't really like to be in trades from 11 till 1:30. All right, so there's midpoint of the mean threshold of the OB, closure above. So now, like that would technically be confirmation as you trade into it and close above it for the first time. So like say you're waiting for some type of confirmation, then you would try to enter on that candlestick as it hits the open again, or the high of it, stop below the candle closure low, like that, right? So you'd enter there, try to squeeze out like at least 5 handles or something, which would bring you into these highs. But yeah, that's also why like equilibrium of the ranges are a little bit difficult, because you have to squeeze out runs. Whereas like if you get entered here, it's very easy to get 5 handles without even needing to attack like external ranges or things like that. Where say you're entering here, to really feel comfortable holding that or like getting good risk to reward, you'd almost have to target the high of it. So the extreme of that range. But in consolidations, that's a lot less likely, right? It's a lot easier to catch trades from the extremes back into equilibrium than it is to catch trades near equilibrium to the highs and lows of those ranges. Those are a lot less likely to play out. Classic high resistance here. So even if it does run, it's going to be high resistance, right? A lot of passes inside the fair value gap, multiple retests before the run. I will be BRB. Okay, fall through it. We'll see if we get that entry right here then. Because this will become like a breaker now. So it could send us lower. But we invert that volume balance. So I'd kind of look for high, low, higher, high. Retest that. Push lower into the 5. And then we'll see if we can get tapped in for entry right there. Da, 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 da. Oh, if you're short right now, that'd be good. Because we're trying to short into that anyway. We'll have to go down first, right? So it's beauty of that. You can trade both sides. First presented once again, so we're trading inside that. We may bounce from here, but as I said, I would look for this now bearish fair value gap to actually hold price. Paired with the volume balance to send it lower. And then from here, we should find out pretty quickly. Like if it trades into this 5 minute and it wants to maintain bearishness, it'll fall right through that, to be honest, because we've already delivered into it and attack it's low. But if we're correct, it should just wick it and then make another pass at the highs. We wouldn't even need to get up into there. We could probably just target that bearish fair value gap again. Keep it simple. So there's that fair value gap breaker. Once again, though, just right at equilibrium, right? So continuing to play around equilibrium. This time it's paired with the bearish fair value gap. So I wouldn't be surprised to see another, at least tap of that, even if we're going to go lower. Right, tap the equilibrium, break lower from there. Yep, did we get that? No, we didn't get the volume balance, okay. So yeah, I would expect something like this to hold price. He said middle of nowhere. I mean, you could simply just use a YouTube model short and NQ. Right, like this would have been, that would have been the best opportunity. You clear the short-term high and you're hitting a higher time frame key area in the new week opening gap. You displace, shorting that fair value gap right here. Or if you miss that, shorting right now, right here. Low-hanging fruit, right? Just to get into that opening efficiency. That's what I would aim for. That would pretty be textbook like that. Closure below, cool. So I would expect honestly a quick tap of that and then a run into our entry. And then from there we'll see how it pans out. After this we'll leave it. I'm actually just going to target like that, to be honest. We could even just go something simple. Yeah, so that would have been a nice little run there. As you said, we should be wrong or right quickly because we've already tested this 5 minute. If we want to maintain bearishness, it's going to fall right through the 5 minute fair value gap and just stop us out. So I'm kind of looking for either one of those things to take place here. Might we should either get a quick stop, pretty much disregarding the 5 minute. If not, if we can bounce from there, honestly, I'm just going to go. I like the high of it, but you can even just go 5 handles to close out the day. because I don't really want to be involved too much longer. So this will be it here. As we said, just so you are aware, no actual entry, okay? Purely paper. Because it's not within the time window for me. So no entry here at all. I'm always a time then price type of person, so. Cool. Yeah, we need to hold midpoint. Oh, stop should be below the swing low. Sorry, right here. Right, so whatever swing low is just below the actual inefficiency is what the stop would be. So yeah, I'm kind of trading ES, but on NQ chart. Interesting. Yeah, what does that mean? Trading what's not in the chart. That's a secret right there. See, that used to be my thinking, Natalia. Pays better is subjective, to be honest. Because it really depends on your stop loss. It's like, honestly, like, let's say you did take that short that we called out here, just into that inefficiency. Even though it moves more handles, technically, your risk should be based off of the stop loss. Yeah, that was a good short right there, though. Which to me, probably, yeah, we'll probably just fall through this then. Right, what you would expect to see is a quick rejection, so especially if we're going to hit midpoint. But the fact that we hit the low of that, if we don't reject immediately, we'll just get stopped. Cool, okay. So as we said, right, quickly. Because it's already visited the 5 minute, if the idea is it wants to get through that, it's not going to spend much time in there at all. It's either going to trade into it and move away, or it's going to trade into it and fall right through it. And that's exactly what happens. And now it's going to use the low of it to get probably into, as we said, equilibrium would be the expectation. He said NQ hits better for props. Maybe, I guess. I guess if you're like only doing one contract at a time, yeah, that makes sense. Cool, so we're done there. As you said, just to confirm, no other trades. So we didn't actually take that at all. This is the only trade we had today. First presented, partial at the high, partial again at first presented, stop and profit. Easy day. Nice and easy. I wonder if we go funded. Wait, real fund or prof? Or prop, you're probably saying. Prop funded. Same thing. Nice. Let's see what happens here. Could still hold that, actually, I would expect. Did the 5 minute, because what time did that close? I'm thinking the 5 minute close underneath, so that 5 minute is going to want to act as a potential inversion in my mind. So I'd almost want to see from here if it makes another run lower. You're at entry level. I guess I don't know. Are you long or short? Because that will affect the outcome. Like, to me, we should just keep running lower, right? As we said, we close below it. We've already traded into it once, so if we're going to disrespect it, close below, it's going to act as an inversion. My intention would go towards the midpoint of the daily volume imbalance, which has this swing low paired with it, at least this swing low. because now we have relative equal lows here like this. Low here, low here, low here. Some sell side. Only thing that's nasty is we did wick this, right? So as we often say, you don't want candlesticks to close below that, because this could be a purge, revert, tap the liquidity, and then run higher. So that's kind of what I would watch in the short term. Is that we would have wanted to see price close below this, especially because it opened with the bearish volume imbalance. But the fact that that was immediately negated means that we may actually want to simply retrace into this range again, high to low. Yeah, just ES primarily, honestly. I always have NQ up. I'll take some trades on NQ every now and then, but it's probably like 95 to 5. 95% ES, 5% NQ. So there's the original liquidity. What you'd want to see now is for it to close below that original liquidity. You wouldn't want to see it wick. Like if your expectation is running lower into sell side here, you would want this sell side equal low to be breached, close below, which should set into motion now another run lower, right? Using that as resistance paired with the 5 minute. As we said, higher time frame is bearish, so the 5 minute should hold this inversion and its volume imbalance, which should send these lower time frames lower as well. Simply waiting on that. So as we said, closure below. Now I would look and see this should hold as resistance, at least a 5. So as price trades up into that, I'd want to see that hold off a resistance, attack a low, clear a short-term low, and then for me, kind of the max reach I'd look for is just equilibrium or midpoint of this daily volume imbalance here. We've hit the high of it, right? So if I bring this whole thing out, that's why you're seeing us kind of hesitate here, because we're hitting the high, which is a very key area in price. But the final expectation is lower. It's just going to be high resistance on the way down. Ooh, that's 2 bad numbers. You said don't get the full win, but get the full loss. Damn, that's all right though. That's all right. I put the stop to swing low. That's why there was no stop. Wait, Oscar, are you long or short though? Sorry, I don't know. And there's no stop. You should always have a stop. Long. Yeah, I wouldn't necessarily like longs, if I'm being honest. It could work, but we're just at a time, like 11 o'clock to 1:30 for me is really a no-go zone. Because it's pretty much 50-50 at this point, right? We've delivered into the higher time frame objective. We've retraced into equilibrium. Like to me, I think it's going to try to come back into equilibrium of this entire morning range. So as we said, lowest low between 9:30 and 10:30, and then you take the highest high. Look where equilibrium is. It's actually midpoint of the daily volume imbalance. Perfectly? Yeah, that's crazy. So honestly, that would be my expectation. Midpoint of this whole range is the daily volume imbalance's consequent encroachment. That's going to be a very strong magnet. Add to the fact we have short-term lows. My expectation would be we're going to run those out, return into that, and then chop into the lunch hour. So yeah, the fact that that equilibrium is the midpoint. Like those are the things that we use to kind of give us confidence in the fact that we should get down there. 10:30 or the morning range did not want to be breached. As we said, SMT at the highs with NQ. So I would expect this to slow grind lower. But ugly delivery, high resistance delivery. So as we often say, after clearing some type of liquidity, price will consolidate near that liquidity. So we clear that low, especially because, as we say, it's paired with the 5-minute. It's paired with daily volume imbalance, new day opening gap. So we're starting to return into the whole jumbled collection of new week opening gaps, first presented. That's where we're going to see a lot of consolidation. Right, that's another reason why this one was high probability for me, because from where we enter to where we exit, there's really nothing there. Right, so it should be allowed to move freely, which is why we see that nice run higher. It was once we retrace into where there is a lot of time-based PD arrays, price gets a lot more choppy. So yeah, we'll hang out till the lunch hour starts, and then we'll go get some lunch. Call it a day. A lot of high impact news this week, as we said, so it should be a fairly active week. Should have a nice opportunities throughout the week. Let me just see again. I forgot about Powell. That's the only bad part. Tuesday or tomorrow and Wednesday. At what time? 9. We may actually be on early tomorrow, to be honest. Try to get it done before Powell starts talking. So once again, just hitting the 5-minute, right? 5 minutes the inversion, so I'm expecting, as long as the 5-minute holds, lower prices. So seeing these runs up doesn't really throw me out or anything. As you said, it's just going to be kind of consolidating and high resistance, so it's going to give multiple passes into that area. But my macro perspective would be this low here. This might be a little opportunity. Small fair value gap, right, as we left. That's the first time we've done that, notice. And notice how that fair value gap's consequent encroachment is exactly the low of the 5-minute. So to me, that's kind of a little signature that may want to hold us now. We may be done. Let's see what that does. May just leave it too, but I would expect something like maybe hit this liquidity, clear that low, bounce back up into the 5. If the objective is here, then the 5-minute holds to send us lower again. It's like a wick into this to retrace that, and then another wick, especially like if we left a low here. Let's say that this does not clear out this low. Instead, it maybe makes a swing low like right here, and then gives that retracement. I definitely would expect that to come back down. Okay, so straight into it. So at that point, boom, we're good there. That's really my expectation. From here, I don't have any more bias at this point. Inside daily volume balance, midpoint, equilibrium of the current range, low to high, heading into lunch. So for me, that is it, right? We're done, so no need to be pushing. Nice delivery though. So we do write it down. I was going to try to soup that, but as we said, if this becomes a swing point, especially because of the SMT, we would expect price to actually just continue bearish. That would have been the shorting opportunity right there, right? Same in NQ that we called out here. So it's pretty clean. target to lows, or as we said, using the 5 minute, once we close below it with the 5, that's going to be an inversion. So that could have been another opportunity. You close it below it, you use the 5 minute with the high as kind of the stop, especially because, right, the 1 minute was inverted as well, so now you're overlapping PD arrays. That ends up holding us, and then we get the run right into equilibrium. And then look at that bounce. Love to see it, love to see it. Okay, so we'll hang out another 10 minutes until the lunch hour starts, and then we'll call it. See if we can't keep following it. Let's see if it wants to hold bearish. If we do just want to keep falling, we've hit the 5 minute. We would need to get below that, but then this is where we start seeing like these untapped inefficiencies. So as we said, these became breakaway gaps until we reach the higher time frame objective. But once we do reach that, that's when these open fair value gaps will then be traded back into. Oh. Nice. Yes, nothing wrong with that. All right, sometimes you just miss those trades. It's better to stick to your original idea and just get no trade than to try to kind of flip-flop and make mistakes. That's good. Good maturity. Very woman-coded, I will say that. Women have it a lot easier. I feel like women are better traders because they don't have like that ego that guys do. It's like something like that, right? The fact that you could just have an idea and it didn't go to where you expected, so you just sit on your hands. Whereas I know plenty of people who would, as price starts moving, they have that need to be right about the move and be involved. So now they're chasing it and they make mistakes. Lucky, you got built-in superpowers. That's usually why women make better traders at the end of the day. This may be a nice inversion here, though. Kind of want to see what that does. The same idea, right? So like, let's kind of move some of these. We use the 5 minute immediately, which is what we expect, but now we actually have a 5 minute open inefficiency like this. So let's say that we just want to kind of even retrace into that. If we end up inverting that, something like that is simple as well. Simple enough. But it looks like we might just want to keep on heading lower. Yeah, potentially it looks like we're just going to fall right back into all of these, right? Don't forget the cluster of new week opening gaps here. We have 1, 2, 3 new week opening gaps all in this proximity. 830 first presented, opening range gap. So you could really see everything that's coming along right here. Gets a little bit messy when you have everything on the chart at once. That becomes a 5. So like for the time being, my key areas of interest. The 5 minute here. That held nicely. We don't really need that for the time being. Don't really need that. We did break below it, but... So I'd almost watch something like, right, coming off equilibrium, let's say that this holds displacement and then a retest of the sell side to hold into just even that, just something small. If not though, we'll just hold the sell side and make another pass at lows. And then maybe we can actually come back down into, as we said, we do have open inefficiencies down here. In my opinion, if we give up midpoint, so currently we're sitting at and respecting equilibrium of the daily volume imbalance here. We give that up and close below it, I would expect the low of the daily volume imbalance to be targeted. This is where you just get crazy and go like this. One hands will stop. Well, you know, but that's like high frequency trading right there. Hey, da, 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 da. Let's see, the NQ hit its equal. That's a crazy candle right there. Like, what is that? It's only on one now, huh? I don't know if that's a glitch. It might be a trading view glitch. It's a huge volume imbalance. That's weird. We'll often see lunch target the opposing liquidity, so that's kind of why I would expect, like, if we did invert this here, we displace back above that sell side into the lunch hour, we could start targeting some of these highs again. Another run up. Right, you'll notice that, as we said, once you confirm the breaker, that is what held us the entire time. So we close below here, confirmation, we use it in the short term, retrace it to midpoint, leave it again. Fair value gap within the breaker. Boom. Look at the wick. Oh yeah, it's ugly. It's ugly. Ooh. Jim. Okay. So I mean, pretty much expectation here. We've cleared out all that liquidity. We're sitting right at equilibrium of the current dealing range, low to high, which is also the morning range. Let's see if we get that displacement. There's that displacement. As you said, that low should hold. The one handle would have worked. That's funny. So at this point, if we retest the original sell side here, I would expect that to hold price, to be honest. You want to see something like that? You could even use that low. So as we touch sell side, you'd want to see pretty much an immediate rejection. If not, we'll just fall through. Like if we retest equilibrium here, As I said, we'll probably just stay choppy. Time prevents you from making mistakes. All right, so as we head into lunch, I'm a lot less willing to be in, a lot less willing to trust frameworks and candlestick structure. No inefficiencies, yeah, so this will be for sure like a high resistance run. I still think we should get up there. If you're gonna force something like that, would be entry, right, on the original sell side. Could always do that just to force yourself. See how uncomfortable it is, why you shouldn't do it. Because that is just ugly. Right, ever since we created that low, not one inefficiency has been created, just all range bound. If we had like the 30 seconds or something, you would see simply just consolidation, seek and destroy. Five more minutes and we'll be Gucci. Get your final questions in. Da, 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 da. .4 hour. Let's get a little good strat off of it. So can I have the blueprint of your strat? Which one, my guy? I got plenty. That's the thing, I'm a little bit different, right? I don't trade like a model per se. I simply just trade order flow. So it could be fair value gaps, could be breakers, volume bounces. It's whatever's the most likely to hold in that current moment. But I mean, yeah, I don't know. You'd have to be with me for a while to really understand. But like, there's a lot of strategies. Right, like we have the run on stops. We have a liquidity sweep. For this one, this is just a continuation trade, right? So this was a continuation strategy. This trade specifically in continuation markets and trending markets, any new discount will hold price. So as we see 930 holds, right, we're accelerating, we're leaving breakaway gaps. Most recent discount holds, we accelerate. Most recent discount holds, we accelerate. Down close candle holds, we accelerate. Wicks that get traded through become gaps. So when we create that wick, close above it, leaving a discount, that's entry, right? Clear cut continuation, most recent discount will hold us into a higher time frame objective here. So for this one, that was the strategy. Continuation trade off of the wick, seeing that as a gap. But right, sometimes we use reversals. Like if you wanted to see how I use each one, that's something that you'd more likely have to go to the Discord to see. Might have more precise breakdowns and whatnot. Very serious SMT. I wonder what that means. I mean, if you're referring to a 1 minute, I wouldn't really see that as SMT, to be honest. Sometimes price just like wanders. Like if you're saying because we didn't clear lows here in ES we did, maybe valid, but I don't really put much attention into that just based off the time and based off of where we are in price. Now up here at the highs, right, that was actual SMT, which is why we would expect something like this to hold. Well, this high runs out that high while we fail to do it in ES. But down here, not really SMT at all. Simply just consolidation, right? Yeah, you're right. Like, if we're gonna get that high, I mean, I also think it's a little less likely, unless lunch. Like, lunch would be the perfect time to do it, right? As we say, lunch will attack kind of the opposing liquidity. So this whole time as we headed into lunch, a lot of buy side has been left while clearing sell side. But if we couldn't even get that during lunch, I pretty much would expect just continued falling. But it's a good way to, right, keep your way out of unfortunate trades or just sloppy trades. And as she said, if it never gets there, no trade. All right, so yeah, chop, chop, chop. Simply referencing, right, once again, as we said, we're at equilibrium. So in my mind, we've already done all the damage that we need to do for the morning. We ran out the lows. We ran all the way up into the higher time frame inefficiency in the form of the 5 minute. And now we retrace into equilibrium from low to high, where we will probably remain for, who knows? Could be the rest of the day, it could be the lunch hour. But we're content leaving it there. So if you guys are going to be around, let's kind of see what we could do here. Let's clear up. Let's go like this. Really get the higher time frame objectives. Yeah, that's, I mean, right, once again, higher time frame wise, this is another hideous day. It's like if you're someone that relies on higher time frames, you're not going to have much to go off of. Good thing we are lower time frame efficient, so we know what to look for on these 1 minutes and below. But as far as the overall macro perspective, we're just still range bound. So I won't expect that to change for the foreseeable future. That is crazy. It's just shocking how bad price action is. Wow. I've said this before, but learning to trade right now would be tough. But brutal. But we'll give you something to go off of, I guess. So let's say you're going to be around this afternoon. For me, couldn't get any more 50-50 at this point, to be honest. But devil's advocate, let's say that we can. Let's say we trade into new week opening gap or even the opening range gap. Let's go like a 1 minute. If we can trade down into this, bounce from here and then get back above new week opening gap, I'd actually look for longs at that point. So like from here. So let's say that we continue to slowly kind of just fall here. We trade into this and then we give some type of right confirmation. I'd trust that to try to go back long. Conversely, if we fell right through this, that would almost flip my idea to shorts, to then target this low and this low. So two what, like if then statements, right? If we maintain this, I would expect to maintain bullishness. If we fall through that fair value gap, I would expect to continue to run for lows. Besides that, I don't really have too much, honestly. Yes, live and breathe. I do think this is going to be the expectation for, yeah, the foreseeable future, unfortunately. Right, as we said, very uncertain conditions. I mean, we literally dropped bombs on Iran. So as much as people say like, oh, we're not going to war, or regardless, like we're still performing military action. Right, so anytime we're doing that, dropping bombs on people, it's just going to be uncertain. And now you have the potential for retaliation. which creates more uncertainty, right? Probable black swan events. So in my mind, this type of delivery is going to be the new normal until, I don't know when, until things cool out, or until we are in a full-blown war and then price is just going to dump maybe, and then that might work. But even then, like, I think, say the market did dump or something crazy happened, right? We get bombed, some terrorist event, God forbid. I still don't see price moving legit. Like, it would probably dump extremely, something like this. But after that, it's just going to continue to consolidate. So, like, more than likely, you won't even be able to catch a move down. So, yeah, my expectation is this delivery for forever. But yeah, I'm really glad we know how to kind of navigate within this. Because if you're a trend trader, like if you're a swing trader, good luck, right? Swing trading is an absolute, like, I mean, there might be some opportunities, but look at the hourly chart, like, right? There's no way you can really capture anything. We've been stuck in this real consolidation, I would say, from this gap. How long has that been? 45 days. Sheesh. 45 days. And before that, we were in this consolidation for 18 days. Yeah, we'll cook chat. You best get used to it. So we actually did come into the new opening gaps. Let's see if we displace back above. Displacement back above. Now that we've hit the low of the daily, if we get back above the daily, I would expect that to be support to run into some of these relative equal highs. Specifically, this level here has my attention as buy side. I can see that's kind of what I'm waiting for, honestly. Too early to call, but if we could bounce and get above the daily volume bounce, I like that for longs. Have a lunch start running, right? Because as we said, that's the daily volume imbalance. That's a new week opening gap high. New day opening gap low. Original consolidation, down close candle. So I am watching that. Like if we can displace above. Get the buy side. Haha, yes. We're leaving. That's hilarious. I actually thought you meant bouncing, if I'm being completely honest. But yeah, we're leaving. I get sucked into the chart still. After all these years, still. Can't resist the movements. That's hilarious, but yeah. You're right, you're right. 3 times the charm. We're no more 5 goodbyes, all right? We're getting better at that. So yes, we already gave you the idea, right? For me, as I said, if we can hold volume and balance, get above, I would expect buy side. We fall through. For me, I still would expect higher prices unless this is like the line in the sand. So for me, I would only be eyeing longs unless we fell through this fair value gap, and then my idea would go short. But for us, we were already done on the day. All right, one last time, we'll kind of just go over all we did. This was all. So early morning, right, waited for the 10 o'clock news to come in. As we said, that's the wick. So when we create the 10 o'clock news wick and trade through it, that becomes the gap, that becomes the key area in price that's overlapped with the first presented and the bullish volume imbalance. We use that to get long into a higher time frame, 5-minute inefficiency, partialing out at the swing point, 8 handles, and then again at first presented as we run it before being stopped in profit. And for us, that's all we had. Like, get your money, secure it, and then let price do whatever it wants to do. So we'll call it a day there. Tomorrow, I'm not too sure. We have Powell speaking at 10 Eastern, right? So I don't ever really like trading when he's speaking. So we may try to do like an early stream, like 8:30. Let's see what 8:30 offered us today, just to be curious. Yeah, I like the vid. Appreciate that, Mike. But yeah, I think we will do... Sorry, I'm really just debating if we want to do early stream. Let me take one more look at the news that we have. Yeah, I think we will try that actually. So we'll get tomorrow's stream going at like 8:25 Eastern. So it's going to be an hour earlier than usual. And I'm going to try to be done before that 10 o'clock news even drops, to be honest. So we might not get something, but if we do, we'll try to execute. So plan for that. Early stream tomorrow, 8:25 Eastern, before all the news at 10 o'clock. Until then, have a good rest of the day, everybody. Stay safe. Enjoy your afternoon. And we will talk early tomorrow morning. See you guys.